So there are two different types of equity release plan. You've got a lifetime mortgage and a home reversion plan. Now, a lifetime mortgage is a special type of mortgage product. It's only available to people who are aged 55 and over, and the interest rate is fixed for life. Now, you don't need to refinance when you've got a lifetime mortgage product because the rate is fixed for life. And a lot of people, they don't think that you can take out an equity release on a lifetime mortgage basis. It is a mortgage, it is a charge like any other mortgage that you take out, and you will retain 100% ownership of your property. There's also quite a lot of safeguards in place, which I'll talk about in a second. But the second type of equity release plan is a home reversion plan. That's a bit different. Now, it's not a mortgage. It's where a provider will purchase a portion of your property at a discounted rate. So for example, if you own a property valued at 200,000 and you want to sell 50%, which should be valued at 100,000, the provider might buy it from you for say 50 or 60,000. So they're buying it at a pretty huge discount, but they still benefit from the gain in equity, and they will own 50% in that scenario of your property. So equity release is a later life product, so it's only available to people who are aged 55 and over. And most equity release applications are on your own home, so it's typically people who are refinancing and raising money from their own home. That's why it's called equity release. However, you can also use equity release for a purchase as well. So in the same way that you would use a mortgage on a purchase property, you can do the exact same with a lifetime mortgage. The only thing you need to watch out for is loan to value requirements. You typically need a much higher deposit for a lifetime mortgage purchase than you would for a standard mortgage. Lifetime mortgage products, they normally need a loan to value. The maximum loan to value for lifetime mortgage products is around 50 or 55%. So if you're buying a property, you would need to have at least 45% deposit if you're proceeding with a lifetime mortgage product. So equity release products are now one of the safest products that you can take on the whole market. They're highly regulated. They never used to be as well regulated many years ago. They've got quite a bad reputation, sadly, for how the product was many years ago. For example, the interest rates, they weren't fixed for life, they were variable. There wasn't a negative equity guarantee in place, and a lot of people sadly lost a lot of equity from those previous schemes. Now, with the new lifetime mortgage products, there are so many safeguards in place. Any lifetime mortgage product and home reversion plan that's approved by the Equity Release Council will have various safeguards in place. A few of these are a no negative equity guarantee, so you cannot possibly owe more than the value of your property. If, for example, house prices crash, if there's a war, or if something happens where house prices fall in the market and your outstanding balance exceeds that sum, the difference is written off by the lender, so you don't need to worry at any point about being in negative equity. And crucially for your beneficiaries, you don't need to worry about them having any sort of debt on the property. Interest rates, they're also fixed for life. So again, you know exactly how much interest will be payable at the end of every year if you choose to pay it or not. That's kind of the beauty of lifetime mortgage products as well. You don't need to make any payments, but if you don't, the interest will compound. We always advise clients, if they can, to at least meet the monthly interest payment, but that's entirely at your discretion. If you choose not to, the balance will just continue to compound, and it will erode your equity over time. You also have permanent rights to reside in your property, all applicants, until both parties pass away or move into long-term care. That's the caveat. But those are some of the safeguards in place for a lifetime mortgage product. You also have an overpayment facility normally, so you can overpay typically up to 10% of the outstanding balance on a lifetime mortgage per annum. But it's a very safe product. It's much safer than what it used to be. So you should avoid equity release companies that are not regulated. Ideally, they should be approved by the Equity Release Council. The Equity Release Council, they have very strict guidelines in place for what brokers and providers have to do to meet their standards. So you just want to make sure that you go with a broker or lender that meets those, and you'll be absolutely fine. As I said, there are many safeguards in place. And for example, if you come to us at Boon Brokers, we will thoroughly go through your most suitable lifetime mortgage product or equity release product with you to make sure you fully understand it before proceeding. And it will be with a provider that is regulated and is approved by the Equity Release Council. So I think it depends how you define a good equity release lender. Obviously, you want to go with one that's approved by the Equity Release Council, meets all their guidelines and standards, but really to find a good lender that's going to offer you the best product, you need to use a broker. You need to ideally use a whole of market, reputable, and also fee-free broker. There's a lot of very high broker fees out there for equity release cases, many thousands, and quite frankly, often you don't need to pay to access those mortgage products. So I would say visit a broker such as Boon Brokers, send an inquiry, and we'd be happy to look into this for you, and we'll find a lender that is suitable and is considered good. It will meet all the Equity Release Council guidelines, and we'll find the very best in terms of overall cost and loan sum requirements for you as well. So equity release is typically quite an expensive product in the market. For us at Boon Brokers, we normally see it as a bit of a last resort really, because the interest rates, especially for the lifetime mortgages, interest rates are quite high. At the moment in the market, they can be well over 6%. At the time that you watch this video, they may have come down. It's well worth checking with us to see what the rates are. But typically, because the interest rates are fixed for life, they are going to be more expensive than your standard 2-year or 5-year fixed rates on the open market. So as I say, we normally see it as a bit of a last resort, but if you contact us, we can let you know any suitable alternatives. There's lots of different retirement products. You've got retirement interest only products. You've got ones that go over a 70 age term. There's lots of different products that we can look into for you. And as I say, a lifetime mortgage is normally a bit of a last resort. So do you want to find out if equity release is right for you? Contact us. Our business is totally fee-free. There's no cost at all for a consultation, and you'll learn something from it. Give us a call. Our number is 01508 483 983, or submit an inquiry on our website, and one of our expert brokers would be more than happy to help.